Hey guys, it's May from Markets with May, and in this episode, I'm going to talk about why Berkshire Hathaway analysts and shareholders should have a look at AMC. Now, I realize this might trigger both my Berkshire Hathaway people and my Ape AMC people, but I'm going to do this video anyways because, quite frankly, in almost 25 years of looking at company, I have not seen a more interesting case study than AMC, other than Berkshire Hathaway. For my Berkshire people, I'm going to give you 5 very distinctive reasons for what the payoff would be for you doing this effort. And AMC people, in order for some of the gamesmanship that you've been experiencing to end, you're going to need investors on the caliber of the Berkshire folks to either come in and support the stock outright at a price, or alternatively, to just address some of the gamesmanship loopholes that have been happening. Now, given the comments on my other videos, I already know some of you guys believe that the Berkshire shareholders are a bunch of hedge fund managers that short everything. That would be a misunderstanding of what this company is all about. Berkshire investors are primarily value-based. Quite a lot of them would never short a company and aren't structured to do so. It's not their style of investment. And for those that do, they tend to have very specific reasons that they would and very specific things that they would say that should not happen. And for my Berkshire people, if you just give me a DCF argument in the comments, I'll be polite because I may see you at the shareholder meeting in the spring, but shame on you. I know you won't have watched through the end of this video and really understood why I think this should be a case study you should look at. Now, if you're a shareholder of neither, but you're just a finance aficionado and are curious what I'm going to say, each of these 5 areas are actually legitimate white papers that could be written on AMC as a case study. Now, the first reason you should study it is to study the management team. There aren't that many case studies of turnaround CEOs, and Mr. Aaron has actually brought this much farther than most could have. The second reason is a case study in distressed corporate finance. Whoever is his banker really deserves an award for Banker of the Year. The third big area of case studies is actually the exploitation of regulatory gaps and failures. The fourth area sits within financial microstructure and is a discussion of operational deficiencies that have plagued this poor group of investors. And the fifth reason is the creation of an active, engaged, and supportive shareholder base. Now, Berkshire people, you know that this question comes up almost every other shareholder meeting, so I encourage you to listen to the end. Well, you might be thinking, what about valuation? And I'm going to leave you to do the work on that. You guys do it best, and you'll need to do quite a deep dive on this one because of the dual share class and the votes that are coming up for investors. But first, I got to give the disclosures. Past performance is not indicative of future returns. This is not investment advice. This is for education purposes only, and I am fully disclosing that I'm a shareholder of both Berkshire Hathaway and also Ape shares. I do not own AMC shares. A quick shout out to Gorilla.app. Money goes where it's treated best. If you want to find out more about them, have a look in my show notes. Also, I am starting to collect email addresses. I promise not to spam you, but I'm considering doing a newsletter later this year, so it would be awesome to have your support there. Now let's get into my 5 reasons for why the Berkshire folk ought to look at AMC. Now, the first reason is truly management talent and turnaround acumen. Now, Mr. Aaron's first time at bat was navigating Norwegian Cruise Line as its CEO through the Gulf War period, but I was a little young then. I started to get to know his work when I was looking at Vail Resorts at the turn of the century. Now, his time at Vail was very controversial, but extremely innovative. In fact, most of the innovations that he did to Vail have been captured and repeated. In other words, Mr. Aaron is no young man to the game of taking assets that other people don't know how to monetize and monetizing them. Now, AMC's been distressed this entire time, and Mr. Aaron's being paid primarily in stock. And when someone does something like this at this age in their career in a public company, not a private one where you get to do your things quietly, it should be at least intriguing to any analyst. Now, some of the strategies been announced, which include putting the AMC brand front and center and releasing snack products associated with it, which y'all know there's a multiple that's pretty decent for that if it works out. The other things, Highcroft Mining, I have mixed feelings about, but I do actually understand why he's doing it and that it could be extremely profitable to help this company out. Now, the second area of case study is financing a public company in volatile markets. What's made a lot of the news truly is the meme stock period of 2020 to when it all exploded in a blaze of glory. And more than one meme stock was able to get excessive financing. But because of the way that the shareholder agreements were written, there were some complications for Mr. Aaron to do the same. What's been recently missed is what he did in his announcements on December 19th and December 22nd. Now, I go through that in these two videos, and I encourage you to watch them, and I'll put links at the end and in the show notes. But truly, what's happened there is to be studied. While it's significantly more common in the housing market to buy back your own debt at cents on the dollar, it's a little bit more rare in the corporate markets, if for no other reason than people don't have the acumen to get the financing through some other means. He did it. He did it at cents on the dollar, and it absolutely gave the company a better situation on the balance sheet as well as lower interest. Now, I go through that in greater detail on this video, so please do have a look if you're not up to speed on what happened this Christmas for AMC shareholders. But truly, even if you never buy an APE or AMC share, every CFO ought to pay attention. Now, item 3 is market manipulations and exploitations of regulatory gaps. What's happening with AMC is absolutely happening as well to all the meme stock. The weird thing about it, though, is news media is largely still painting this group of shareholders' concerns as the ramblings of unsophisticated investors. You know what I have to say to that? Good luck pretending like that's my deal. I've laid out the argument that you will need in order to understand their issues in this video, so I encourage you to look at it. Now, there's a couple of teasers for this video that I would like to put forth. The first is that while the SEC has fined a few firms for violations of Reg Show, until this rule becomes revisited by the SEC, they're really limited in what they can do about it. But it is a true problem in the marketplace because the SEC's job, more than anything else, is to protect retail investors. Additionally, and I talk about this in the video, because at the heart of this is a hypothecation agreement, which is a lending agreement between the investor and the broker-dealer, it's possible that this area, which has not been explored as a means of stopping the nonsense happening with Reg Show, is a place that some legal genius could come in and do a class action suit on. In other words, if you work at a big bank, it's worth making sure you don't have liability here. Now, for my APE AMC folks who are still living this, there was one comment I hope you didn't miss. One person that was a viewer consulted a securities attorney, and this was the advice that was given. To the extent this is helpful, I wanted to share it further. Additionally, just so you know, unlike these baby fines for Reg Show, Wells Fargo just paid out about $3 billion, which was half of their earnings for a given quarter for violations in consumer lending. So that's why I'm saying it that way. Now, I'm not a legal expert, and I'm really trying to get more people to forward this to people that might have that specific skill set. So it's not for sure that this is a way to go, but I'll give it to you as my contribution to try to help you guys out. Now, the fourth reason to study AMC is because it's a case study in the exploitation of financial microstructure. Now, that is a mouthful that means a lot of different things to a lot of different people, even within industry. What I'm saying is that there are operational inconsistencies, and also there are differences in cross-asset class behaviors that are being exploited at the expense of shareholders. Now, the simplest and early microstructure issue had to do with the speed and efficiency with which different broker-dealers versus the member exchange posted up different strike prices. Now, I'm going to simplify that down 2 times just so you can get a sense for it. Number one, it's the reason why a lot of these trade with an implied vol well over 100, if not at times over 300. Number two, the technological change that would have to happen across all broker-dealers is so great that it pushes certain individuals into the voice brokering market, given how aggressively these trade. In other words, just this one, if there was only one, would be enough to create excessive volatility in the marketplace. But instead, literally every possible derivative instrument you could think of is being exploited. Now, in addition to that, the manner in which the swaps market interacts with the options market, all of which are not entirely accounted for by Reg Show, has another level of nasty that absolutely leaves these investors unprotected. Now, realize a lot of this business is data, and the way it looks when you take all of that information from a data perspective relative to what is actually being experienced by the company financially creates a very unfair setting. Additionally, the shorting of AMC on exchanges like FTX in a tokenized format is also something that is just ridiculous. The manner in which hedge funds who are already naked shorting via synthetic instruments were then using that to demonstrate some sort of netted out trade. If that's actually how it's being done, then definitely this needs to be moved up on the chain of things to be considered. Now, I've got a lot of really good questions that, quite frankly, are really advanced as relates to how to think about the tokenized short selling of AMC stock and its implications on both the swaps market, the options market, and then the actual stock market itself. And usually I'd be able to answer that. The only challenge that I've got is that FTX blew up in a blaze of glory. And right now, the regulators don't know who has jurisdiction to take what assets in what ways. So I don't have an answer for you, unfortunately, guys. But if I think of something clever to say that's meaningful and helpful, I will share it. Nonetheless, this advanced gamesmanship in financial microstructure ought to be worth at least one class at Harvard. Now, the final thing that truly is worth studying is Mr. Aron's creation of an investor culture that is enthusiastic, supportive, and engaged. Now, AMC apes are great investors, but the Berkshire Berkeys, they're OG. I mean, say what you want and hate me, AMC apes, but the original diamond hands, hold on for dear lifers, belongs to the Berkshire Hathaway folks. Now, the reason, though, that I feel that Ape AMC shareholders are worthy of study is just have a look at how many followers Mr. Aron has amassed and how frequently he communicates with them. They're interested in understanding every piece of what Mr. Aron's doing and what might actually take their investment higher. These 5 areas that are really next level case studies demonstrate a desire to research and learn more about the markets that I really only see with Berkshire Hathaway. I mean, let's call it what it is. It's been a minute since someone asked me to describe the implications of Basel IV on the swaps market or to describe cross-asset class implications as relates to what would be implied on short selling. These are not basic questions, but because it's affecting these investors' investments, they deserve an answer. Now, I want to make this offer to all folks watching this video. If you've wanted to see Warren and Charlie speak, you know, they're not getting any younger. So every shareholder gets 4 tickets, and you only really need to own Berkshire B. If that $300 investment is too much for you, then ping me on Twitter. I literally just started my account. It's @MarketsWithMay. I could use all the help I can get on there. And that's all I have for this episode. If you found value, please do like, share, or comment below. I will try my best to respond to every single comment, but it is really just me, myself, and I doing this. For folks that are trying to come up to speed on AMC, here's a playlist of everything I've made associated with it. For those that want to learn more about Berkshire Hathaway because you want to go see Mr. Buffett, Mr. Munger, here's a playlist that can get you started. I will be updating that further as we get closer to the annual meeting.